The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this 11th day of September. Of course, a very notorious day many years ago, but we just have to try to move on from there. So the Dow is up 146, up at 26,003. This is really interesting. It was, in a sense, a little oversold. The 120-minute chart, as I showed subscribers, had a chance to break 25,818. The left side support from the 7th. It certainly did that this morning. It went to 25,754. Here you can see 25,730 in the 120-minute chart with automatic Chapman wave support levels was almost hit and then rebounded sharply. And I had a very good question come to me. Kevin said, what if Canada, what was the exact question? If there's an agreement with Canada over tariffs, what do you expect the market to do? And will this change the direction of the tide? Thanks. So that's a very good question. And I thought about that over the weekend quite a lot. I looked at a lot of charts, and there were so many charts that were giving signs that they could bounce a little bit, but there was a real good chance that the trend had changed, at least the shorter-term trend, daily trend had changed to down. Certainly, if there's something that is favorable in the China talks, Canada talks, I suspect Canada is going to cave. That's just my opinion. But I thought that they would cave after a lot of hoo-ha, a lot of kind of, we're not going to, okay, just only on this particular aspect, and then maybe only on this one. That was my thinking. So I don't know quite right in this particular moment why the Dow is up 145 at 26,000. S&P is up 14, Dow's at 50.56%. That would include industrial, so that's important. The S&P is up 0.49 at 14.07. And that says to me that, here we go. If you're looking at, for instance, the Dow made a high of 26,167. It's only 165 points away from that. But I think it's going to be a little bit of a struggle right now to pierce that decisively. The weekly chart, as I said to subscribers over the weekend, still acting very well. We've got to watch levels before we can get bearish on the weekly charts, and certainly not on the monthly charts, but the daily chart definitely showed weekly. Even now it's showing MACD's weak. Stochastic is pretty weak, even though it's trying to turn up. So let's go to the S&P, SPX.X. The S&P is 2891.41, up 14.28. Attempted this move on Friday, couldn't make it, close just on or a fraction below the 14-period exponential moving average. Now it's sharply higher. MACD's negative, stochastic's very negative, on balance volume's trying to rally. I think this is going to turn out to be yet another H. I think the H pattern is something that you need to be focused on, and I suspect that we are very close in time and points to some kind of another test of the 28, that would be the 2884 14-period exponential moving average or below it. That's my thinking right now. I haven't yet had a chance to assess whether to change it because it's intraday. I don't want to do a daily chart, talk intraday, other than to say I would watch for this. If I said to subscribers, there's a chance that we could bounce. On Friday, we went short. And then I said on Monday, there's a chance that we could bounce, and we could bounce into Tuesday or even Wednesday. This morning's open was very weak. But then actually it was very weak earlier on. By the time the open came, it really wasn't that bad. And that said to me, okay, be ready. And we put in another short, which we've got stopped out for a small percentage loss in the Dow on the short side. And we're really mostly in cash. And it's fascinating that UTX is still acting very well. The IBB is having a little bit of a rally here. So, yeah, we've got some longs that are remaining. I'll get to the dollar in a moment. But in the meantime, back at the ranch, my bias right now is to be looking at a consolidation based on the daily chart, not the weekly chart yet. All right, so the S&P below 28 Let's make it 2884 to 2882 cushion, a close, any intraday 120-minute bar. Underneath that support would be negative. So far, this is nice, and I think you can go just a little higher. So 2892, you can go to 2890, could even go to 2896s. I'm not sure you can get back to 2900 just yet. All right. So now the QQQ. Now it's going to be very interesting. QQQ was very weak this morning, but in fact, since Friday's low at 180.44, the Invesco QQQ Trust Series has not taken out that low that was made, even with Friday's pullback and today's earlier pullback. The NQ, now that's different. The NQ, which is the continuous contract of the futures, that low on Friday, it's pretty much the same thing. It held the 50-period exponential moving average, this little dashed line right here. Now it's over both the 40 and the 9-period moving average. That's good. It has, it had quite a big move for this particular index. Call it continuous contract, E-mini, NASDAQ, going from the just under 7,700 to just under 7,400. Hey, that's a big number of points. And now I'm treating this as a bounce. The whole Canada thing, you cannot rule out that there will obviously be some cheering in the market if some of that is resolved. And there'll be some very glum faces in some of the editorials coming up. If that's the case, we'll see what happens. Okay, QQQ I did. IWM. IWM is the Russell 2000 now. This is going to be very interesting. Why? Because the Russell 2000 pulled back. It pulled back a little better than the others. It's holding nicely. It's up 0.43% and up 73 cents at 171.48. Now, this is going to be very interesting. Why? Because that weekly chart is held very nicely, but the technicals are actually starting to slip. Slip just a little bit. So I'm watching this very closely. I would not be surprised if this whole rotation goes once again through the cycle of each sector having a turn to the upside while the other sectors are a little weaker, and then suddenly one of them is much weaker and one of them is stronger, and then you get this whole panoply of diverse indicators. And I think that's really the code. That's the key to the whole of September. Choppy, I think slightly lower highs, slightly lower lows, and we'll see what happens. I don't see anything yet in terms of some kind of a smash to the downside. I could be wrong, but it has to build some kind of momentum of fading to go much higher, and that'll give it a chance to do it. But so far, I just see chop. IWM at 171.40. Up 65 cents, 0.37, one of the weaker indices. It's just chopping around. I think 172.30 is a really strong resistance, and 169.80 should be good support. All right, let's go to gold. Gold was weaker earlier. Gold is now up 0.7. It's not great, but let's face it, it's better than being down 4 or 5, and it's making lower lows and lower highs in an arch formation. Make it real simple. If gold at any point starts to trade, this is the continuous contract, under 1190 trade. It needs to hold on a 120-minute basis on a daily basis. It needs to close under 1190 on a daily basis, and that's pretty negative. It'll mess up the weekly chart and certainly the monthly chart. And if we get to the 12th by Friday, that'll be very good action. That's another 20 points higher. I'll talk about the dollar as soon as we return. Basil Chapman, 1,131.30.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi everyone, Basil Chapman. So let's just go on here. So silver, let me just do the silver because I did gold. Silver is up, it's down 0.04 at 14.13. Made a lower low today. It's not acting all that well. The weekly chart is making it, well, 2 hours, 3 hours into the first day of the new week. I'm not going to talk about a potential doji candle when we've got a whole week's worth of trading to go. But this is going to be a very interesting week because the stochastic is at 7.3, shows no signs of strength. On balance volume shows no signs of strength, but there could be a V-shaped turnaround in the on balance volume, both in the daily and the weekly at lows like this, which should help the silver chart get to 1433 and then 1447, the two moving averages of importance. But right now, I don't see anything of significance. Now let's go back to the dollar. The dollar itself is trading up 11 cents. The fact that it's just up 11 cents is not a big deal. The fact that it's up 11 cents after making this arch formation potential to break into the 94.40s, 94.30s, 94.60s, 94.50s, that's what I meant to say. It's kind of important because you're using up time now without wasting it going to the downside. So I'm watching it because the weekly chart still is the beak formation, but as soon as there is a rally, if there is a rally, into the 96s, I think we're up and away, and that dollar is going to start to climb quickly. But until then, I think it's just stuck in a range. We are long, but that's not the issue. The issue here is as an intermediate, we've already had since the beginning of April, May, June, half a year we've had it, and you can see that the MACD is just barely, it's minus 0.0146. It is just barely about to cross positive on the 0% line. The stochastics rallying. If they turn up with price, if price even goes above on Friday's 95.56 high, I'm looking at this and I'm saying, gosh, maybe the consolidation is complete. 96, 98 down to the 94.40s. That's 2.5 points. That's a pretty big consolidation for the dollar. Maybe it's done. We'll see. And that will impact gold negatively and vice versa. If there is a pullback below the candle of the 7th, 94.87, let's call it 94.60. If it goes under 94.60, I think it goes quite a bit lower. So this is a very important moment. EUR, USD. I haven't seen Peter for a little while. Currency pair. This is the euro-dollar currency pair. Looks like the dollar actually is just stuck in this range. I don't know what to say here. Oh, we'll make it simple. At 1.158, if there is a slide underneath Friday's low of 1.152, I think it's going to go a little bit lower. And if there's a push above the candle of the 6, I think it is, yep, the 6 of 1.165, I think that's going to be a positive. USD JPY, that's the yen currency pair. Whoa, nice move up today, 111.57. This is the one that more closely represents what the dollar's doing, not point for point, not directional all the time, but very often it is moving and it's either leading or following the dollar's trend. And then it didn't do that for a little while. Now, all of a sudden, it's kind of back to doing that at 111.56. A close, not just a push over, but a close over 111.83 would be very positive and start leg C. In the daily, it's got to go a lot higher to get the weekly to D, which is 113.21 back in the week of the 20th of July. I think I've done most of it. I just want to finish up with the crude oil and the TLT. TLT is down 64 cents at 180.93. You know, if my thesis about money flowing into bonds as a safety factor, if equities are volatile, meaning they're going down, this says equities are holding pretty damn well, and the only thing that's going down is the TLT or bonds. And there's that H pattern that went to an M pattern in the weekly, and there's the H pattern that's going to a little tiny M pattern in the monthly. The trend so far looks more like it's down with yields going higher. Well, that should help the XLF. And the XLF, as we stand right now, if I can just retype it and type it right into that typing section right there. XLF is trading up 0.06. Hey, a nice candle, made a lower low, running nicely. I still don't know if I want to be in this yet. Goldman Sachs, oh, down $1.33. Doesn't look very good. How's Bank of America? We don't have a position anymore. Holding quite nicely at 30.85. Not looking too great, though, but holding okay today. Yeah, so that XLF, and then I said I'd get to crude oil, and lo and behold, crude oil is up 173. Huge move. Made at peak E-top, long-legged doji candle about 6 sessions ago. Went all the way from the mid-71s down to the just under 67, trading right now 69.26. This is darn good action, very good action in the crude oil. Let's see what's happening to the XAL. XAL running as well. Everything's having a good rally. Up 43 cents at 169.98. Stuck in range, the ARCA airline index at 106.98, up 43. Semiconductors I was asked about, they're not participating very well. 105.75 down, $1.11. I think this is the big story for me. That's the way I look at it. So what I am going to do is I'm going to say I want to look at, just because I said I would do it on Friday, I never had enough time. ADSW. ADSW is in fact 27.46 down 30 cents after Doji E on Friday. This is Disposal Services Inc. Had a fantastic move, only a leg C in the weekly chart. Keep this on your list. I wouldn't be buying it right now, but put it on your list as something. We will be putting it on our list as something to look at, because I love that waste disposal area. Well, I love the charts because they just, through thick and thin, they always have a place. ADSW 27.47 down 29. And now let's go to the next one. Thank you, Jeff, for sending it to me. CLH, this is Clean Harbors, I believe. Yeah, leg D in the monthly, leg C in the weekly. Yeah, you can't leg A. That's not a leg A. The low bar cannot be the high bar except in an instant restart. So that's really A, B, C. So it's in C in the daily, C in the weekly. This is one to keep your eye on, acting very well. Clean Harbors, who knew? This is a stock that once was an absolute favorite, a darling, back in 2009. From the beginning of 2009, it went running from the 20s up into the 70s and then turned around sharply and then went sideways to lower lows and lower highs till it hit 37, and now it's trading at 71, almost double. Very nice. Okay, I'll do one more CWST. CWST, what is that? CWST is trading at 32.68, down 82 cents. Leg C. This is, what the heck, Casella Waste Systems. Strong leg in the monthly, strong leg in the weekly, strong leg in the daily, but it's really close to some kind of a short-term top. Waste management, if I can get there, that's the lead one. That's the one I always follow. Leg D in the monthly, leg D in the weekly, and I haven't finished renotating A, B, C, D. Leg D, I believe, in the daily. Getting a little toppy, but holding very well in the meantime. Dow's up 135, S&P's up 12. Basil Chapman, Tiger Conditions Hour. We'll be right back.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So looking at the 2, 5, and 10-minute charts of the E-mini, we're at peak B in the E-mini. It's not a guarantee that it can go to a C or a D, but it's good that the stochastic's at 89%. The MACD is strong, but it's the 5-minute chart that really tells you what the story is, because it's right at support now. If it closes under 28.87, it says be a little careful. But I'm really looking at this and I'm saying, in the larger scheme of things, if there's a close on any 10-minute bar today, it's at 28.90.50 right now, under 28.85, that's going to be a big negative and probably start to pull back towards the end of the day. However, any push above 28.95 would be very, very strong action. So that's why we're looking at that. I wanted to get back to this for a moment to say a couple of questions that have come in, which I think are important, but one I don't know if it's a statement, but it's a kind of analysis. Fred says, interestingly, the cycle date that I had as a top was the 29th, and that was a top. I also show a rally beginning this week and lasting till around the 14th. Good call so far. Then a decline into the 20th with a small bounce and then a decline until around October the 9th. We shall see. So far, my top and short-term turn have been on, but cycles are never easy. Fred. Yeah, Fred, there's no question about that. But good call so far. Very nice. Another one was for the bigger picture. If I can just find this now, VTWIX. VTWIX. Is that the Vanguard? Yeah, that's the Vanguard total return. So that made a D. Oh, it actually went to a D in the weekly chart. It's pulling back from that D. The monthly chart has made a peak C and taking a long time to digest with a gray A and a gray B underneath it. And the daily chart you can't see because it's just made up of the close. So it's just a little line there, a dot or a line. So as I'm looking at this, the total return says it looks very much like the bonds right now. So I'm watching very closely to see if there's a break to the upside. It's at 152.56 right now. A push into the 154s would be 154.50s would be very good, and a pullback underneath 151, a close below 151 would be very negative. Okay, so that's got that. Oh, I remember what I needed. I didn't do this on Friday. It was a question about Home Depot. I don't think I did it. I was going to, and then I might have run out of time. Home Depot trading at up 3 at 213.70. This is a huge leg C in the daily, breakout leg D in the weekly, and a leg, it has to be called the new leg C in the monthly chart, and that's really good market news. It's good all the way around. Economically, everything for Home Depot to be doing this. All-time highs as we speak. Leg C should still go to a peak C and then a leg D and then a peak D. So this is very good action. Stochastic at 91%, MACD good. It didn't look so good at 200 just the other day. Yes, I know it's only 13 points, 21, so it's about 7.5%, 8%. But that's not the issue. The issue is that the home builders, as I showed my subscribers to my opening call over the weekend, look, the home builders, HGX, nice candle today, but not a lousy candle for 2 days yet, for all 3 days yesterday, of the last 3 trading days of the week. And the monthly chart and the weekly charts are not looking very good. So it's really important that this rally right now in the Philadelphia housing sector index continues, because if it starts to stall and at 301 right now, if it starts to go into 298 one more time, that's not going to be very good. So we'll watch it closely. Now, a couple of questions I was asked about last week, didn't manage to get to. The VIX index, I touched on it, but I didn't dwell on it. What I mentioned was on Friday that for the weekly chart, this was the first time in a little while. No, it wasn't the first time in a little while. On the monthly chart, it would be the first time in a while. In the weekly chart, it's happened periodically, but it hadn't happened for a little while. And the daily chart, it was the first time that we were actually trading for about 3 sessions, almost 4, above the 200-period exponential moving average in a long time. And that said that you got to be a little bit careful here, because there is selling going on, market selling. Well, today the VIX index is down at 13.45, down 71 cents. It's under the 200-period moving average. It's sitting on the 9-period moving average at 13.45. I'm watching this very closely. And my thinking, let me just have a look. Under 86. Yeah, I don't know if we actually did that. Let me just, please, if you don't mind, I needed to check something. I don't want to talk out of turn, so let me just check it. And that was at what time did I say? 10, 20, 888. Yeah, I need to just check something out here, if you don't mind, because I don't want to talk out of turn. I'm going to go to my 10-minute chart just for a moment. And what did I say? Before 10:20. So let's go to today. Let's go to, what's the time there? 10:20. Okay, so I think we did buy the UVXI, the UVXY. Must have been a real quick trade. I think we might have just missed it by minutes, but I said before 10:20 to buy it, and only if it went under 888. And I'm just going to do this right now. Then I can do it. There it is. UVXY 1120 11. Oh, it did that. Okay, it did it. So it went under 11. It went under 888, and we had a real tight stop because it was either going to work right away. 10 cents. We're done. All right. The reason, and I'll explain why I did this. If there was a pullback and the market was pulling back, and there was going to be a bounce, my thinking was that the bounce would come sort of after maybe some 10 o'clock news. That gives it 20 minutes, and either I hit it exactly right, and the news was not good, it was negative, and we had got the VIX index long, and it worked out very well. Or if I missed it, it would just be a fractional miss, and I just put in the tightest of stops. So that was my thinking. However, I'm looking at this and I'm saying, you know what, we're in a big cash position. I only had a couple of three trades for traders, the shorter term trading. But most importantly, I want to see, I'm not sure when the Canada news is coming out. I'm not even sure if that was the reason that the market is up. But I don't want to be whipsawed by going in and out of bigger positions. I'd much rather have a nice cash position because I think that there are going to be some terrific buys coming up. Maybe September, maybe early October. And I think having cash for that is going to be very good. So that's my stance. That's the way we're trying to trade it, we're trying to position ourselves, and we'll see what happens. And if you go to the E-mini right now, ESU18, it is trading. Still got that peak D, a peak F in the 2-minute chart, peak D in the 10-minute, a 5-minute chart, but a peak B in the 10-minute chart. Is this going to go to a C and a D today? We'll see, because the stochastics at 89% and the MACD is very strong. That's going to be very interesting. I'll be right back. Basil Chapman, Tiger Chicken Zone.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Folks, we're back to showing you the E-mini here. Still hasn't broken out to the upside. Now, let's just go to this. Couple of questions came in over the weekend. One is, could I show the New York Stock Exchange? Usually, yeah, because I don't think it's as important as it used to be. I haven't been showing it all that much, but I mean, it's a heavyweight. It's, you know, it's a big index, and this did make it a rare peak G right there around about the 26. And turned down quite sharply in the daily. The weekly chart did make a peak E after it went through the rectangle formation and broke out above it, but now it's below the high that was made in that very sharp rebound after the February 9th low, and then it ran to the week of the 2nd of March at 13,018 after being down in the 12,100s. And then it comes back and it has a much better pullback, and then it goes peak A, B, C, D, and E. So it's at 12,958, and the high that was on the week of the 2nd of March was 13,018. So at this particular point, nothing wrong with the weekly chart, holding very nicely. MACD's good, not great, but good. Stochastics at 80%, just about a slip under 80%, which would be a little bit of a negative. And that monthly chart is really the one that I keep my eye on because it has a pattern that I call a Chapman wave right shoulder failure pattern. It's really the integrate. It's really the start of a potential H pattern. So I'm going to put this in, but I'm going to also show you that there are really 2 patterns that it's fighting. One is it can't be the cup formation. It's more like the rectangle formation, and I have to lift the rectangle up to at least the red candle. This is called the Chapman wave Roman candle, right there, the candle of February. The monthly chart, and that has a high of 13,338. All-time high was 13,635. So it's still in a rising highs and rising lows environment, and it's only the beginning of the second trading week of September. I don't want to talk about this as if it's a monthly chart that's just closed, but I am saying the New York Stock Exchange weekly and monthly charts seem to be stuck in a much narrower range, maybe 13,000, just a little over 13,000 on the upside resistance, and 12, I would put it at 1280. Nah, I'm going to make it a little lower. I'd say 12,750 is kind of the support that I'm looking at. Okay, now we've got a whole bunch of those things out the way. In the den, there was a question earlier on. Would I look at now? Am I going to find that? Yes. So the question is, would I look at The MDY. MDY, we don't talk about it very often, but believe me, the MDY I consider to be a very important index. It is the mid-caps. And the mid-cap MDY, S&P mid-cap depository receipts, is a leg. I'm calling it leg F, but it really, there's no reason why I shouldn't even consider that there could have been an instant restart right there in the monthly chart back in July of 2017. Let's call it F/B for now. I'm even going to give it, I'm going to type it in here to make sure that I'm showing you the reason why I have alternate counts is because I want to know what else is there. It's not like, oh, you can't be wrong because you're saying it could go up, it could go down. No, I'm saying I don't know. There's nothing. There's no reason why the alphabet just couldn't continue. Yeah, the MACD certainly bounced, made an M-shaped pattern. Stochastic rebounded nicely to 90%. But I want to just be going in sequence. So it goes peak D, instant restart, leg E/A, F/B. And that's important only in that it keeps me appraised of where it is. The weekly chart has potential for an instant restart. And I used to just look at instant restarts and say, show me. But there have been so many this year that worked out fantastic that I'm now saying, you know what? The theme is that these very quick leg D to a peak D, and within 2 bars, 3 bars, it takes it out and goes to a new recovery high. And that can usually be a continuation pattern. I don't want to ignore it. The MACD is good. Stochastics at 89%, very good. So this is a peak E for now, but there is a chance of an instant restart. But it can't just go above 374.10, the all-time high. It really has to be trading for about a week or two in, say, the 375, 376 area. If it does that, or if and when it does that, and if it does it without taking out, say, the 367, 364 key moving average support levels, that's going to be a hint to say instant restart. Don't get fancy, just follow the trend. And the weekly chart has a down channel, and here it makes it much easier because it says if there is a close, well, there it is. If there is a close above, right there, okay. If there's a close above the height was made on the 6th of September of 372.87 in the MDY, that would be very positive and suggest even higher prices to come. So we'll watch this closely. Whoa, we're doing a lot of work here. The IYT, as I said to subscribers this morning, excellent action. It's led the way to the upside, even with crude oil at its recent highs. And that's good. Leg F in the weekly, leg E in the, F in the monthly, E in the weekly in the Chapman wave methodology, and a leg D right now as we speak, and it might even turn out to be a peak D. I'm looking at this at 208.52 on Monday, 208.53. So it's extended leg D. I'm watching this because I like to see the transportations leading, but I want to see the Dow industrials real close behind, making almost making new all-time highs. IYT can't lead by itself. It needs the Dow as well. All right, now, where are we? I think we're in this consolidation phase. And yes, it's news-driven, but I think it's also stock-related. And if you look at Amazon, probably up a little bit today, up 27, more than a little bit, up $1.43, 1.43% at 1966, up 27 at 27.80 gain. 2050 was the peak D top, and the 2013 round number low. I'm just saying to you, if it goes over 2013 this week at any point, that's really good action. Now, if it closes over 2013, sorry, not if it goes, if it closes over 2013. Am I correct, though? 2013. Gosh, that was a big move. All right, so that's Amazon, peak D in the daily, leg E in the weekly. Well, I can say, yes, there could be an instant restart. I'm calling this E for now. MACD is a little toppy, but good. Stochastic starting to pull back, but still good at 88%. Relative strength has been quite weak. And on-balance volume is holding nicely. And a huge leg E in the monthly chart of Amazon. So that's Amazon. Let's go to Goog. All right. Google, yeah, Google, I'm not going to go to Google for too long. It's in a consolidation phase. Daily chart is in a sell mode. Weekly chart has gone to a sell mode. Monthly chart hasn't even given a sell signal yet because it's still very strong. But that silent doji candle of last month, I got to watch that real closely. We'll be back for the last segment. In the last segment, I want to cover a couple of questions that I had sometime last week that I don't think I got to. I'll be right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
All right, so the American Express is up 93 cents. It's had 3 fabulous sessions in the last 3 days, and it is at 108.22 all-time high. Leg F in the, here again, yeah, leg F in the weekly chart, leg E in the monthly chart. So what's going on? Look, MasterCard is up 68 cents, but it's kind of stuck. It hasn't rallied like American Express. Leg F in the weekly chart, leg F in the F/B in the monthly chart, trading at 212.34, up 67 cents. But wait a minute, Visa is also in the same situation. So what the point I made earlier in the week, yesterday and end of last week, was that I'm seeing a number of stocks that within a sector, you've got some very strong and some very weak within the same sector. So yes, Visa up $1.08 at 145.17, but it made a high at a peak D in the 147, 148 range. and now it's trading 145 after going down to the 142s. So something's going on that we need to be taking note of, and we'll see what it is soon enough. But within the context of the different markets, what I am looking at here is that if you look at, what was the stock I thought I'd pick up the other day? Yes, if you remember Home Depot we're talking about, but I was looking about TTD, which is the trader's desk. Look at this, at all-time highs. I'm not sure how we're going to play this. The Trade Desk Inc. A-shares, self-service ads. In other words, you can make them up yourself through the technology. Leg F/B, maybe it's just starting a brand new move. So the big question to me is, if we're going to get some kind of a pullback, where is it going to impact? What is it going to impact? And what are the stock sectors that might be immune to, say, a successful Canada comes in and looks successful, Canada stays out for a little while, looks unsuccessful, Brexit news coming out. What are all these different, the focus should be local. And that's what I'm really looking at. Will the United States stocks that are really U.S.-centric hold very well, or will they not? We'll talk more about that tomorrow. Stay tuned for Steve, stay tuned for Dave, and Tom O'Brien.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call